On today's Hot Sheet, I'm discussing the Fed's favorite inflation report, PCE, which was released the end of the week last week. What has that looked like here over the weekend for the markets? We've got a housing inventory for the last 7 days, update there, and pending home sale data from NAR. Today is Monday, June 30, 2025. I am Byron Lazine, and the Hot Sheet starts now. Live from Connecticut. Let me know in the live chat which market you are tuning in from. If you caught the Knowledge Brokers podcast on Friday, which we release every Friday, separate channel, Knowledge Brokers podcast channel, separate YouTube channel. Myself, Tom Tooley's channel. One of the things I said on Friday was, I don't know, for the first time year to date, I'm feeling a little more optimistic that Danielle Hale, chief economist from Realtor.com, who's been on Knowledge Brokers pod, that her prediction by the end of the year that will be at 6%. I'm feeling the most optimistic I felt all year that we could be heading that way. We're near year-to-date lows on the 30-year fixed. It seems like the economic puzzle, there's some pieces starting to click together. I get it. And I think consumer confidence is going to remain low right now until consumers see more proof. We know builders' confidence score is really low. I don't expect these things to bounce back just because it's 4th of July week and people are feeling good about their picnics and their barbecues planned for this weekend. BamBBQ.live if you want the barbecue of the summer. Haley told me she's got 5 barbecues planned on the holiday weekend, Friday, Saturday, Sunday. Mrs. Popular here. I didn't get invited to 5 barbecues. I'm inviting you all, though, to BAM BBQ. BamBBQ.live. Leo Perea, CEO of EXP. Ryan Serhant, Technology CEO. And Scott Harris, Experience.com CEO. This is going to be a heater virtual event. You want to be there. It's July 16th. But I don't expect people just to be feeling good all of a sudden because it's the holiday, it's the summer. Economically, there's still a lot of reasons for consumers to have hesitancy. But we're starting to see early signs, soft data, that there are some things clicking on the economic puzzle. And I said it on Friday's Knowledge Brokers podcast. And what do you know? You get into Monday morning and the Dow's ripping again. NASDAQ set a record last week. So it's not just like I've got some weird feeling. The feeling is driven by, look at what investors are doing. They like some of these trade deals look like they're happening. Scott Bessent did a deal with China that seems to be like cooling off some major trade war with China. What did Canada do over the weekend? Canada said, we were going to play hardball with America. Oops, never mind. We're not going to do that. Canada rescinds digital services tax after Trump said, you know what? We're cutting off trade talks. Canada says, no, we'll rescind. Let's get back to the table. You've got things that seem, for the time being, to be a-okay in, the Middle East, which could cause disturbance. Things happen in the Middle East. Usually oil prices go up. They go down this time. There's just a lot of things that's like, wow. This bill, whether you're on Elon's side and you hate it, you know how I feel about it. I hate anything that increases the debt. But it passed a major hurdle in the Senate. There's no question about it. 2026, that bill gets passed. I think you're going to have a boom economy for America's 250th birthday in 2026. Inflation has been pretty much, I don't know, I would call it licked. Jerome Powell says he wants a few more licks of the lollipop before he cuts rates, though. He doesn't think it is. He thinks inflation could move up with kind of these trade deals and tariffs and what's going on. But when you look at overall inflation, boy, it's got a 2 handle. It's overall inflation is about 2.4. PCE, which is the Fed's preferred rate, came out on Friday. Okay, core inflation, you take out food prices and energy, core inflation on the PCE moved up to 2.7. The expectation was 2.6. If you look at overall PCE, came in at 2.6, moved up 0.1% month over month. Those were expected numbers. So headline was, and that was a CNBC headline, you know what? A little bit hotter than expected. Okay. But generally speaking, the last 2 months since tariffs gone up, inflation has been moving down on the other metrics, not up. And here's something that's interesting from Nick Timiraos. Again, kind of the Adam Schefter of the Fed. He's Wall Street Journal. He's finance guy. He says the Cleveland Fed's calculation of this median PCE inflation rate from Friday for May was 0.22%, which annualizes to 2.6%. And that calculation was the lowest since July 2024. Okay, so later in the day, Friday, after the headline, a little bit more than expected on core. There's some deeper analysis. The Fed's measure of the trimmed mean for PCE inflation rate, which strips out the items that rose the most and fell the most every month, was 2%, 1 month annualized in May. The lowest again since July 24. When you look a little bit deeper into the PCE, there's not some big tariff inflation boogeyman sitting behind it. Now, Jerome Powell thinks that the boogeyman could come out over the next couple months. That's the fear. Jerome Powell doesn't want to cut. He would much rather wait too long than be seen as being wrong. Jerome Powell would much rather wait than make a mistake. He's trying to, in his last 11 months as the Fed chair, he's trying to protect legacy, not make a move too soon. Remember, he waited too late to start increasing rates, and it seems like he might be waiting too late to lower them. The 12-month rate, according to Dallas's Fed measure of trimmed mean PCE, was the lowest since October 2021. You got a lot of lowest since X measurements here as, some of these analysts dig deeper into what's going on with PCE. Inflation expectations in the final University of Michigan survey declined to historically elevated levels. 1 year ahead was 5% down from 6.6 in May. 5 year ahead was 4% down from 4.2 in May. Okay. Consumers' change in inflation rates is moving down, not up. Okay. So now consumer confidence hasn't moved up yet, but this is a good sign that maybe that's to follow. Okay. Just kind of looking at the Fed here. Scott Bessent said end of the week, there's a chance that the person who is going to become the chair could be appointed in January, which would probably mean an October-November nomination. That's right, kind of around the corner here after we get out of the summer nomination. President Trump, who's not happy with the Fed's take it slow approach in cutting rates, which is prompting him to consider accelerating when he would announce. That could happen even sooner, maybe, than the October-November. This kind of seems like could happen even this summer. Jerome Powell's got another 11 months. Bessent begins his answer to a question about the earlier than normal Fed chair announcement nomination by saying, I don't think anyone's necessarily talking about that. Well, Trump certainly is. Trump also thinks Fed should set interest rates at 1%. It's probably a little bit of an aggressive move, to say the least. Probably not going to happen. Right now, CME Group has this next meeting, which is in 30 days. So in July, has an 80% chance that the Fed does nothing, no change, 19% chance that there's an ease. It's more likely, most of the markets, Poly Market, CME Group, has a cut happening in September at a quarter point, right? So Trump thinks the rate should get cut. I mean, we're at 4.35, so he thinks it should get cut over 3.25 down to 1%. That would be absolutely crazy. I would imagine most would agree with that. But a quarter point in July would not be crazy, and probably should happen at this point. All right, well, let's get into our inventory update here for the week. Altos Research does a great job giving us real-time data on what's going on with inventory. Let's start there before we get into some of the other metrics across the country. National single-family inventory, according to Altos Research, moves up over 831,000 for the week. Inventory is up 29% year over year. That 831,000 is a move up from 828,829. So not a big move up, couple thousand and change, 2,200 plus active single-family homes coming on the market. Could be entering another slow week this week with the holiday at the end of the week. It is 29% more than last year. The big difference I see between last year and this year is we're starting to flatten out, okay? The curve is starting to flatten. Shout out Dr. Fauci. The curve here is starting to flatten a little bit. 2 weeks now where you go from 825,000 to 828 to 831. Last year at this time, the trend was moving up on inventory. We accelerated through the summer on national single-family inventory, active to the market. We didn't start flattening out until, the end of September, October into November, right? We hit peak inventory end of October, 739,000. Now we're well above that number, 831,000. I get it. But if we were going to follow that same trend of accelerating up, we were going to be easily into the 900,000s. We were going to hit 2019 levels if we followed a similar path as last year, where we continued to accelerate. In a more normalized year like 2019, you kind of stay flat through the summer. Is that what we're going to see over the next couple of months on national single-family inventory? And one of the fears was we're going to accumulate a bunch of inventory over the summer, and that might drive prices down. If we're not seeing that here over the last couple of weeks, we're seeing maybe signs that we might be looking like 2019, the last normal year. And that means we'd kind of bounce between where we're at and maybe as high as 850 over the next couple of months before you have that seasonal fall decline. We'll see. These next couple of weeks will be telling on, is inventory going to continue to accumulate here over the summer. New listings this week for just really the second, third time on the year, break 80,000. That's kind of the number Logan Mohtashami's looking for. This time of year, you would expect to, be north of 80,000. We haven't seen that the last few weeks. We break it this last week. We're going to get into a time of year where it'd be hard to break this number. 81,000 on new single-family listings that this last week. Same week last year, 70,000. So good sign on single-family listings. That's certainly what saved us in terms of active inventory, because pendings had a really good week. Okay, pending home sales for the week moved up considerably. Now we had near year-to-date lows on 30-year fixed, near year-to-date lows last week. Ended the week at 6.72. And what do you know? Anytime the rates get momentum, you typically see activity move up. 74,000 on weekly pending sales. Best week we've seen of the year. That was the best week we've seen of the year, and you don't typically see that in a end of June week. Okay, prior to that, you had 74,212 in May. 74,000 weekly pending sales. Here's total sales in line under last year. Actually, according to Altos, 396,700 versus 397 same time. So, big improvement for the week on weekly pending sales. And a lot of that was, driven by new listings coming to the market, as well as the, and here's the new listings look again, as well as the, year to date, almost near low on the 30-year fix. Percent of properties with recent price reductions holds firm at 40%. That's where we've been. You typically see this number starts to get flat this time of year, might be, another month of increases here, but we've seen the majority of our increases on price reductions. We did see, last year we continued to increase a little bit into the summer. Maybe we'll see that, but it's similar to inventory right now where it's flattening out at 40%, elevated number from last year when we were at 38% on price cuts. Okay. There you go on inventory data here. I'll just mention mortgages real quick. 21 straight weeks of positive year-over-year data on mortgage purchase application. And so the trend here has been really good over the last week. 6.72 on the 30-year fixed. Obviously moving down in the right direction. We'll take that. The weekly came in at 6.77 on Freddie Mac's 30-year fixed weekly. All right. Let's get into NAR's report on pending home sales. We saw Altos said, hey, we just had the biggest week of the year on pending home sales. NAR's report for May is out. Index comes in at 72.6 month over month. Pending home sales up 1.8% from April to May. All four regions saw an increase from April to May. Northeast saw a 2.1% increase. The index is 63.4 in the Northeast. An index above 100 coincides with a higher level relative to 2001, well behind. I mean, we got more population, more age ready age buyers right now, and we're at a 63.4 in the Northeast. Really bad. The West is at a 56.5, even worse. Month over month, April to May, saw an increase in pending home sales of 6%. Midwest comes in at 73.7 on the index, 0.3% month over month increase on pending home sales. The South moves up a point month over month, April to May. South still the strongest index score on pending home sales at 86.7. Obviously the strongest score on inventory as well. It's according to National Association of Realtors on their pending home sale data. 1.8% increase in pending home sale data month over month. Year over year, it looks like 1.1. Again, rear view looking. Altos research, which has more real-time data. As we sit here in June, they basically say we're flat on pending home sales. We just looked at it for single-family listings, flat on the year. As of May, according to NAR, we're 1.1% increase. Those pending home sales have not, even a 1.1% increase, of course, is low, has not correlated into an increase on existing home sales. Existing home sales still trending near kind of this historically low level, considering where we're at on population and all those other metrics, down at the 4 million floor on existing home sales. I still am a believer in the future. For the first time this year, I'm starting to get bullish on 2026. 21 straight weeks of mortgage application data moving up. That's a good sign to me. If Danielle Hale, chief economist, realtor.com, is right, we end the year at 6%. We've seen momentum. We've seen some things clicking economically, and that it's not a political statement. It's just the facts. Like there's been deals being made. The investors like it. Watch what the Wall Street's doing. Stock market's going up. NASDAQ hits a high last week. Maybe this big, beautiful bill that they keep talking about goes through. It's passed the House. Now it's passed the big Senate hurdle. They did a 20-hour debate on that. Like things are happening. There could be some more money coming into the market next year. There's been a lot more mergers and acquisitions this past 3, 4, 5 months than there was, all of, the 4 years prior. Mergers and acquisitions bring more opportunities. There's going to be more investing in companies, and that's going to bring more opportunities into the market. So, we haven't seen it show up in the hard data, the pending sales, the existing home sales. But some of this soft data, 21 straight weeks of an increase on mortgage applications, the rate continues to move down. We may just see, a good fall market and a really strong 2026. Maybe 2026 is the first year in 3+ years where we can say the real estate market is out of a recession. Real estate's been in a recession since June of 2022. Not an economic recession, a real estate recession. Last 24 hours on the 10-year, another move down, 4.263. Another good sign for the 30-year fixed. Treasury yields tick lower as this spending bill was the big story, economic story of the weekend. It's a divisive spending bill. I don't like adding debt at all. But the bill is going to keep taxes, all those low taxes in effect. It's going to lower taxes for the most part. And it's going to bring money into the economy. I don't think kicking the can down the road is a great plan, but you can't get Congress on board without spending money. These both sides of the aisle, okay, they're addicted to it. They can't get away from it. So, it's not as easy to, doge the deficit as Elon thought it was. 10-year coming in a little bit lower, 30-year yield moved more than 2 basis points lower, and the 2-year yield slipped. These are good signs for mortgage rates. The procedural hurdle that was passed in the Senate on Saturdays is now slated for final debate in the Senate. They're trying to jam this bill before the 4th of July holiday. Could add over 3.9 trillion to the national debt. Don't love that. But it will bring money into the economy. So if you're just thinking where 2026 might be heading, look, why do investors all of a sudden, why are they piling into the stock market? There's been a lot of money on the sidelines. And now there's signs that some of that money's coming off the sidelines. Look at what's happening. Dow's up today, S&P's up, and NASDAQ, which hit a record last week, is up. So stock market's moving up, 10 years moving down, 30-year fixed mortgage rates moving down. Very interesting. Okay. Let's jump into school, BAMX. Classroom for the hot sheet, give you all the data that I go over. You want it at your fingertips. It's right here. Just go to the June tab on the left, and all the data we went through today is here for you. Weekly pending, total pending, single family inventory. So you got it at your fingertips carved out. And Zudelio helps us put on the hot sheet, helps BAMX members create free cash offer platform. It's a $2,400 value, by the way, that our BAMX members get for free. Zudelio does that. I just saw 3 deals close with BAMX members recently. Want to have a competitive advantage in the market. And if you're a BAMX member, use Zudelio. You get 4 offers instantly with Zudelio, and they get a ton of data across the country where the top cash offers happening across the country. Here it was for the last week: Albuquerque, in New Mexico, Las Vegas, San Diego, Knoxville, Tennessee. That's the top 5. Atlanta, Orlando, Jacksonville, Phoenix, and Tampa. That's where cash offers are happening at the highest level across the country, according to Zudelio. You can use Zudelio's cash offer platform if you're a BAMX member for completely free. You get free access. Go to school.com/BAMX for that. BAM BBQ, BAMBBQ.live, July 16th. 12 Eastern to 2. Register now. That's the only way to secure your free spot at the BAM BBQ. Tickets are selling fast for our only in-person event of the year, BAM Camp, Scottsdale, Arizona, September 24th. I think VIP's almost done, or is it done?
I don't think it's done yet, but I think almost.
Almost done. Mid-tier pricing is halfway sold out. And then we'll be left with GA. BAMcamp.live, September 24th, Scottsdale. All right. There you go. Hope everybody has a great start to the week. I will see BAMX members on live role play calls at 9 a.m. before the hot sheet tomorrow, 9 a.m. Eastern, inside of school. There's the link on the calendar. So if you're a BAMX member tomorrow, 9 a.m. Eastern, live role play, myself, Tom Toole, Lisa Chinati. We're doing expired listings tomorrow. seeing some more listings across the country. A lot of markets are a buyer's market. There's listings that are expiring out, and we're going to go through that formula tomorrow, 9 a.m. Eastern before the hot sheet, and then 9:30 Eastern, of course, will be the next hot sheet. Until then, have a great start to the week, and of course, toodaloo.